Hey everyone. So this is a common question I get when I'm doing my webinars or when I'm sharing on TradingView. I get messages like this, and they ask, when is it a good time to enter a trade? Should you enter a trade during as the candle moves, or should you wait for it to close before getting into a trade? So I've done a quick video, I've done a quick write-up here for you guys, just to guide you along the thought process, what to think about before entering a trade or when you're deciding to enter a trade. So first off, there is no hard and fast rule about whether you have to enter a trade as the candle moves or you have to enter a trade when the candle closes. All right, deciding on an approach or deciding when to enter a trade has been a concept much debated in the whole trading world. Everyone has a different perspective, everyone has a different approach, and it works for some, it doesn't work for some. Ultimately, it comes down to your own trading style. So here are some other considerations to think about. First off, it's what's your strategy? How do you like to trade? How do you like to enter a trade? Basically, if you're looking to trade based on momentum or breakouts, right? What I mean by momentum or breakouts, that's when price is shooting out of a level, right? Or surging in a direction because of a news release. In that scenario, you may prefer to enter a trade as the candle moves because you want to catch that quick movement. You want to catch that sudden impulse. This will be short term, this will be quick. And then if you're looking at trading chart patterns, for example, or if you're more trend following, have a more trend following strategy, you're looking for a breakout of a key level, with that approach, you might be looking to enter a trade only when the candle closes. Because ultimately, if you're trading a chart pattern, you want the candle to close, you want the chart pattern to have formed, get that confirmation before entering a trade. So that comes down to whether you're swing trading or whether you're scalping or whether you're even position trading, right? Scalping is when you are trading in a very short term, couple of minutes, right? A couple of pips, couple of minutes, very short-term trades. Or if you're doing swing trading where you're looking at intraday kind of trades, maybe a day, maybe 2 days, oops. And then after that is until how long you're holding on to your trade for. So traders who prefer short-term trades, scalping movements, would enter trades as the price moves, right? So you're not waiting for a trade, waiting for the candle to close, you're catching the impulsive move. On the other hand, swing traders could afford to wait for the candle to close, wait for the price to indicate a clear bias, a clear directional bias before entering a trade. The next thing to think about is time frame, right? Time frame, the best part of it is you can actually choose. You get a choice of time frame of when you want to enter a trade. A trader on the shorter time frame, the 1 minute, the 5 minutes, or even the 15-minute time frame, may prefer to enter a trade as the candle moves, because what you're seeing is quick price movements, right? Quick price movements or quick candle movements. So you could get into a trade quickly, get out quickly as well. Just catching that small moves, catching that impulsive surge or spikes. A trader on a longer time frame, the H1, the H4, or even a daily time frame, would ideally wait for a close of the candle, wait for a break of a support or resistance level before getting into a trade. So time frame here is going to be crucial as well. Next up, it's your risk management strategy, right? Your risk management strategy. Risk management strategies influences the decision on when to enter a trade. High volatility periods can make it more difficult to accurately or efficiently predict price movements. Especially for traders with tight stop losses, they may prefer to wait for the close of the candle to ensure that price has moved in their favor or moved in their direction before entering a trade. So it's all about when to get into a trade, that confirmation that you're looking for, the risk to reward And all that put together before deciding when to enter a trade, right? Whether it's during the candle or whether it's the close of the candle. Next up, some disadvantages and advantages of entering during the candle or the close of the candle. During the candle, the best advantage or the biggest advantage is that you have the opportunity or the chance to enter at a price that's possibly more advantageous than the possible close of the candle. You might be getting in a little bit earlier, but getting in a little bit earlier also presents that downside where price could reverse very quickly against you, leading to a very quick loss as well. So this could be that formation of a candle, formation of a reversal candle. Price might be shooting up as you get in during the candle. Next moment, it retraces back down. It closes as a pin bar. That's going to show you a reversal, a possible reversal. Then you'll be caught out. So that's one risk. That's the most obvious risk when you're entering during the candle movements. Alternatively, if you're looking to enter at the close of the candle, one clear advantage is that there's a strong or likely to be a strong price evidence that the market is looking to move in a certain direction. But the risk of entering at the close of a candle is that the price could be driven in the opposite direction, totally offsetting your trade setup, or that it's moved significantly in the direction that you've expected, and then you end up missing a trade, right? Missing a trade because of a bad risk to reward, or that it's moved too much and you can't get into a trade. So talking about missing trades, you will miss trades. Let go of trying to catch every trade. Not every opportunity or not every price movement is a tradable opportunity, especially if the risk reward becomes, or the risk to reward ratio becomes less attractive for your trade setup. It is very important to remember that missed trades is part of trading. Many successful traders believe that it's better to miss a trade than to force an entry and suffer a loss. So ultimately, it's really up to you. Like I said at the start, there's no hard and fast rule on whether you have to enter a trade during or at the close of a candle. It all comes down to your own trading style, your strategy, and your risk management approach. Just remember, backtest your strategy. Try different entry methods. And when you see the results, when you see the statistics, stick to what works best for you. So a quick video here for you guys just to guide you on whether or how to decide whether to enter a trade as the candle moves or when the candle closes. If you found this useful, please remember to like and subscribe and stay tuned for more videos like these. Take care now. Bye-bye.